The top 10 countries with zero income tax. Welcome to Alux.com, the place where future billionaires come to get informed. Hello and welcome to another informative video from Alux.com. Today we're going to be exploring the top 10 countries with zero income tax. Most countries in the world rely on income taxes to fund things like military, the government, medical coverage, and so much more. The United States alone has a top marginal tax rate of approximately 39.6%. However, it's not the highest found in the world. Income taxes in places such as Aruba and Sweden can range anywhere from 55.3% to 58.96%, and it's because of income taxes that these countries are able to generate revenue. But we're not focusing on those places today. No. Now we're going to take a more in-depth look at the countries with no income taxes and see what makes them tick. If you're new here, welcome. Be sure to subscribe and follow us on Instagram at Alux. Number 10. The United Arab Emirates, UAE. You might have heard of the United Arab Emirates in the news and media. The most popular city that sounds the most familiar is the city of Dubai. The citizens of UAE are not required to pay sales tax or income taxes, and it leaves us with the question, why? Each emirate is subject to different laws. There are only a few things that most taxes are responsibility for. One of those entities is foreign gas or oil companies. In this case, while tax agreements between the two parties are typically confidential, they can range anywhere from 55% to 85%. Cities like Dubai levy a municipal tax on properties such as hotels and entertainment venues. Alcohol is also heavily taxed. If someone brings alcohol into the country, they're taxed upwards of 50%, and then an additional 30% if they want to purchase it for personal consumption. Number 9. Oman. There are several Gulf states that do not require its residents to pay income taxes. Oman is one of those countries. Residents with salaries and/or wages are self-employed and are not taxed. However, with that being said, there are specific deductions that are taken for Social Security-type charities. People who work privately are expected to donate at the very least 6% of their wages to a Social Security fund. These percentages will go towards Social Security benefits as well as elderly pensions. The employer of residents also adds an additional 1% for injuries, similar to workers' compensation and illness. If residents are between the ages of 15 to 59, they are responsible for these contributions, but only if they hold a position that pays a salary or a wage. However, Oman has several tax treaties with other countries. This means that if residents in Oman are originally from other countries, such as America, they will still have to pay taxes to their country of origin. Number 8. Qatar. Qatar is one of the richest countries in gas in the world. Because gas is a profitable resource, Qatar does not have personal income tax. No taxes are taken from their wages or personal income. This, however, does not mean Qatar isn't without taxes. If an individual is running a commercial business of any kind, in order to gain an income, they're required to follow a company tax law. So, companies are taxed and not employees of said companies. On average, a company pays close to 10% of total state income. This percentage is paid yearly. The income of a resident of Qatar is not subject to paying taxes. In order to be considered a resident of the country, they must have stayed in the country for 183 days, not necessarily consecutively. While there are some things that Qatar have taxes on, it's still one of the lowest taxation countries in the world. Number 7. The Bahamas. Grab your umbrella drinks and relax. The next place with zero income tax is the Bahamas. This beautiful cluster of islands does not have to pay any personal income taxes. However, that doesn't make them exempt from other types of taxes. Anyone with a job through a company or self-employed has to pay a type of national insurance from their income. This doesn't just apply to residents, but to non-residents as well. The national insurance is used to fund benefits. Unfortunately for the non-residents, only residents of the Bahamas are able to have those benefits. Many people who are wealthy flock to the Bahamas because it's considerably tax-free. And they spend lots of time in these beautiful islands because in most cases, they would be paying enormous chunks of taxes to their own country. While income taxes might be at zero, there are other taxes such as real estate taxes. Number 6. The Cayman Islands. Like the Bahamas, the Cayman Islands is often considered a tax haven. This is true in most cases because Cayman does not have inheritance, corporation, or income taxes. If Cayman doesn't have these types of taxes, then how does their government provide health, education, and other funds needed to run the country? Easy. The government relies on an economic model that imposes fees, duties, and sometimes indirect taxes. The Cayman Islands use coercive revenue. Coercive revenue is revenue collected by the government under its coercive powers. This means there's actually no direct exchange of goods or services. A clear majority of revenue that comes in is thanks to import duties and work permit fees. Import duties alone pull in roughly $221 million, while work permit fees rake in close to $100 million. Hey Aluxers, if you like this video, then check out our 15 things poor people do that the rich don't video. Just click in the top right corner to check it out. Number 5. Bermuda. It's an incredible place with sand, sun, surf, and endless beauty. Bermuda boasts a population of over 65,000 people, and it's a country that does not have to pay income tax. It's also considered one of the world's wealthiest countries. So, how does it make its money for health, social security, and revenue? Bermuda, like the Cayman Islands and the Bahamas, relies heavily on tourists. Unfortunately, tourist season doesn't last all year round, so they have to get their income from somewhere. There are two primary ways that the island of Bermuda makes its money. The first is payroll taxes. While employees do not have to pay income taxes out of their check, their employers are required to pay a tax on each employee. That being said, an employer may deduct a specified amount out of each paycheck. Even the self-employed are required to pay this tax. The second way is by paying a land tax. All homeowners are required to pay these taxes 2 times a year. Number 4. Saudi Arabia. Like many other Arab states, Saudi Arabia is one that does not have to pay income tax. This country relies heavily on the exportation of petrol. In this country, there are no sales taxes that are imposed on services. There is a religious tax imposed on businesses. However, people from other countries are not required to pay. At any given time, a corporate tax rate could change from 25% to 40%. The rate corporations are required to pay varies on their profit margins. The petroleum companies are taxed at a rate of 85%. That rate is taken off of their net profits. Just about all expenses that are business-related are tax deductible. Number 3. Kuwait. Thousands of people flock to Kuwait each year. Why? Due to the huge oil reserves, people have the perfect chance to make a better life for themselves. The oil industry in this city is booming. Alone, they have approximately 104 million barrels of crude oil. That's more than 8% worldwide. Taxes are the primary income of the government in the city. However, those taxes are not of the personal variety. The only people that have to pay income taxes in the country are foreign companies working there. The rate for corporations to pay is 15%. The state has a social security system that takes care of all residents working. This system covers things such as disability, sickness, pensions, and even free public health. Number 2. Monaco. Monaco is considered by many a tax haven. This little piece of paradise is located on the French Riviera on the western side of Europe. It draws in hundreds of thousands of tourists each year. It's not imposed an income tax on its residents since 1870. Several countries have imposed a capital gains or wealth tax. Through a treaty that Monaco has with France, there are specific types of businesses that are required to have their profits taxed. If they do business outside of the country, they're required to pay up to and even more than 25% of their net profits. Monaco is widely known for its secrecy, meaning that there are people from all over the world that have accounts with different financial institutions within Monaco. Number 1. Bahrain. This country is considered to be the largest and fastest growing financial area in the Middle East. Because the leaders of the kingdom are smart in their business ventures, economic progress is booming. As a result, they're relying less and less on oil and focusing in other areas of investment, such as real estate and tourism. While they're trying to get away from relying on the oil industry, currently 60% of their revenues comes from fuel. While employees do not have income tax, they're required to pay a 1% tax on their total salary earned. This was implemented to create a fund for the unemployed. There are a few sections and groups that are exempt from this tax, such as elected officials and military personnel. And there we have it, Aluxers, the top 10 countries with zero income tax. These aren't the only countries that implement the zero income tax laws. However, these are the top that have the most lucrative governments and economies. There are definitely some benefits to living in a country that doesn't require income taxes. And now that you know about these countries, we'd love to know, what would you do if you lived in one of these tax-free countries? Now, you made it all the way to the end because you're awesome. As a special Alux bonus, we've added a couple of interesting facts just for you. Did you know that if you're an American citizen but move to one of these countries to live and work, even though the country does not require you to pay income taxes, you'll still have to pay income taxes to the United States? The US isn't the only place that requires expatriates, people living outside their native country, to pay income taxes. And also, did you know that while some countries don't require you to pay income tax, they've found loopholes to bring in revenue? Some countries will tax land, homes, vehicles, and even electrical. So if you look at it, you often find yourself wondering if paying the one tax is better than having to pay several others in its place. Thank you for spending some time with us, Aluxer. Make sure to subscribe so you never miss a video. If you want more, we handpicked these videos you might enjoy, or head over to Alux.com for the best in fine living content on the planet. Be a part of the largest community of luxury enthusiasts in the world and tell your story.